Welcome to today's event, everybody. I'm going to run a poll. So keep an eye on your screen if you are logged in through the Zoho webinar platform. I know you'll see this on your screen. If you're watching us through LinkedIn, may or may not see it. So I'm going to read it off to you and you can add a comment to the stream and tell us what your answer is. So which of these tax loss harvesting headaches do you deal with most often? We've got 3 options for you. Missing opportunities between the time you review accounts, losing track of wash sale windows, ending up a tracking error after a placement that you've made, or other. Drop us a comment, tell us what's going on. So we're going to let that poll run for a few minutes while we kind of tee this up, get things going. But let's get started. All right. So today's session is going to be a deep dive into specific workflow, running tax loss harvesting on demand instead of just saving it for quarterly review or whenever you can get to it. I'm Johnny Sandquist, 3 Crowns Marketing, fractional CMO and marketing strategist for fintechs and advisors, and I am your host. But the subject matter expert, the reason you are here is this guy. He's on this side of my screen, Josh Harris, VP of Growth over at Alphathena. How you doing, man?
Doing well, thanks. Excited to be here again this month. It's the months are just flying by. I feel like we just did one of these.
It's crazy, isn't it? I know. Once you get into the routine, you just go. But I'm excited to be doing this again with you.
Same here.
Let's run through a couple housekeeping things. Already said we are recording, so if you're on this, you'll see that recording later. We're going to do a Q&A at the end. So drop your comments wherever you are watching. I will be scanning the comments section. So if you have a question as we are going through things, we'll get to any of that at the end of this time together. And then let's see, last part of my intro, and then I'll briefly cover the poll results, and then we'll get into it. We're gonna go just deep into how the Alphathena platform lets you really easily manage tax loss harvesting opportunities. And I think that's about all I need to say. People want to see you demo things. They don't want to hear me talk. So real quick, the polls, everybody's pretty evenly split here. We're like at 33% across all the answers, from missing opportunities to losing track of wash sales to having tracking error that you have to figure out after you swap out replacements. I think you're probably going to cover all that stuff today, right? So let's just dig into it, Josh. Let's start here, right?
Yeah.
A lot of advisors are wondering how Alphathena makes tax loss harvesting easier on them, how they can do it a little bit more automated fashion. So what's it look like to be in control and catch those opportunities in the moment when they happen?
I'm going to walk through the platform, and thanks for the intro and for teeing this up for me, Johnny. I'm going to walk through the platform here in a little bit. So I'm going to share my screen. But effectively what Alphathena is after in terms of tax loss harvesting is kind of 2 things: systematizing workflows and making them free flowing and as streamlined as possible, and then scalable efficiency. So as the firms that we partner with grow, how do we enable them to, and we've talked about this on other webinars in the past. It's a recurring theme, but how do we enable them to use technology to support their book of business, no matter how big it grows and how many clients, accounts, households they have. And so what we've built with our tax loss harvesting engine is very different from the traditional way. And I think the traditional way of doing tax loss harvesting is maybe an advisor sits down once a quarter, some wait until the end of the year. They'll pull up every account whenever they're sitting down and doing tax loss harvesting, and they'll manually check the securities in the portfolio that are down in that taxable account. And that's just, we find that there is intra-year market volatility, like we're seeing actually this week, and those present good opportunities to get in there and tax loss harvest and reduce tax liability for clients. And so what Alphathena is doing is scanning continuously through all of the book, all of the taxable accounts, and presenting the advisor or the portfolio manager with tax loss harvesting opportunities using a rules-based method. So it's covering every account every single day. The system is checking cost basis against current price at the lot level, which is noteworthy. And when securities cross into harvestable territory for taxable accounts, the advisor, the portfolio manager, whoever has access to Alphathena will be given the opportunity to harvest. So I'm going to show a little bit of what that looks like, just the workflow tool or the task manager kind of alerting the advisors that use our platform that there are tax loss harvesting opportunities.
All right. Love it. I mean, that's a lot of territory to cover. Do you think we can hit that in 30 minutes here?
I hope so. We've been good with the time in the past. So
all right. I'm excited to see it.
I'm up for the challenge.
And I see your screen. You've got the platform up, so I'm going to let you take us through it.
Awesome. Yeah. So this is our workflow tool. Now, I like to think of this as an alert system or a task manager. You can kind of call it whatever you want, but effectively what it's doing is it's identifying on a kind of in real time tasks or activities that the advisor or portfolio manager might need to do or might want to set up. And so you'll see things like rebalance accounts, tax loss harvesting opportunities, excess and low cash balance. You can set up you can kind of systematic withdrawals, dollar cost averaging opportunities, deposits expected. Again, all of it is rules based, but it does systematize things. It centralizes your full book right here and really lets the user know what they need to do instead of kind of going through account by account and doing those tasks. So this is a really scalable way of maintaining the tax loss harvesting opportunities across all of your taxable accounts. And I can just select these and kick off that TLH workflow, and it's going to start scanning through those accounts to determine if there are tax savings and what they are. And so, yeah, that's kind of how we make it efficient for the advisor or the user, just presenting those tax loss harvesting opportunities in real time. So if they want to do it monthly, they can get in here and select all of these accounts at once, kick off the multi-account tax loss harvesting workflow, and submit the trades across all of those accounts.
Real quick, here. For this workflow task that you've got here, how often is that running through and looking at the accounts? Like, is this firing off new opportunities each morning? Is it running, throughout the day? I know it's up to the advisor to kind of decide, like, hey, here's when I'm going to come in and look at these and address them. But just to clarify, how often is the system going through and pulling in those new opportunities?
So it's real time. It's feeding in real time data. We ingest account data every morning from the custodian. So things like cost basis, units, all of that it just lives in the platform. But we're getting real time prices throughout the day for securities, and I think that's really the part that kind of eats people's time, is when they don't know where the losses are and they need to go in and find them. And so this is a really, really good way of showing them what's in there whenever they want, right? They can switch up. Like I said, markets are volatile, and this week might not be on their typical tax loss harvesting schedule, but there might be some opportunities in there to reduce taxable gains in the taxable accounts for clients. So really it's up to the advisor, but you can do it year round instead of waiting until year end to capture that all year, instead of kind of going into panic mode at the end of the year. You don't really know where markets are going to be. So it just kind of alleviates some of the uncertainty and unknown around, I guess, timing.
Right. Yeah. Avoiding panic mode, I feel like, is a pretty important part of what we want to do here with this software for advisors.
That's exactly right. Yeah.
All right. I'll let you get back into your workflow. Sorry, man. I just wanted to address that real quick, and you can get back into it.
Yeah. So I'm going to dive into just a single account workflow and kind of show you how tax loss harvesting works under the hood. We'll find a taxable account. I'm going to use a long short index or portfolio to start. Now, we offer both long short and long only direct index. direct indexing on the platform. There are a few, considerations when doing long short, when implementing it for your clients. But it does offer kind of an all-weather strategy for the portfolio. No matter which way the market moves, you're going to be basically indefinitely presented with opportunities to tax loss harvest. And so this is an account, a paper account that we had invested last year in a long short variation of the S&P 500. Now, I mentioned this is rules-based. All of this can be customizable. Things like the tax rates, the minimum loss dollar amount and percentage, that can all be customized at the household level, at the individual account level, or if you wanted to blanket these rules across all of the taxable accounts under your master or your firm, you can certainly do that. And then it kind of works on its own, right? So what this has done after it's run is presented me with all of the losses in the portfolio. So you can see those down here. You'll see losses from the longs as well as the shorts. So the kind of the color differences here, and you can see the short positions, the number of units is negative. So plenty of tax loss harvesting opportunities here. And you can see what the actual numbers look like if we were to tax loss harvest right now. So what this is telling me is we're saving the client 237 basis points in tax savings. Maybe they have gains that they recently realized. Maybe they sold off a piece of their business, just realized, embedded securities in their portfolio with embedded gains. Maybe they just wanted to get out of concentration. Whatever it is, this is going to help reduce some of that tax liability for a taxable account for a client. Maybe you just want to bank the losses, right? And do carry forward. We see a lot of advisors using different strategies and how they want to maintain the losses for clients. So you'll see all of the savings up here. I'm going to dive into the replacements here in a little bit, but I do want to just mention that the system is identifying securities that are in wash sale. So you don't have to worry about uncovering losses securities that are in wash sale when you're placing the trades. So that's done at the household level. So if there are other accounts within the household, our system is going to pick up any securities that are in wash sale across the full household, not just the individual account. And that includes retirement accounts as well. So in terms
I think that's a really important point, not to take too long on here, but that household level wash sale look is important because, if, for instance, you've got somebody managing one account and they don't have that full visibility across the household, you can make a trade in a IRA over here, right? And if there's a wash sale, what you thought you were harvesting gets disallowed at some point later. Maybe you don't catch it till later. That's the type of thing that erodes client trust, right? And I feel like what this whole process and ultimately comes back to. And I know you're talking and speaking to that, but being able to be consistent, build client trust through this kind of tax optimization process that's the end goal here.
Yeah, I think it comes down to consistency, transparency, and proactivity. If you have those boxes checked, you're in good shape, and our platform is going to help you with all three. And you're exactly right, Johnny. So you can't just sell and rebuy the same security with the wash sale rule. And it doesn't stop at the single account. So if your client does have an IRA or a taxable account or a spousal account, that 30-day wash sale window does apply. And so having to do that by hand means cross-referencing every related account before you place the trades. And it's easy to kind of miss something. So Alphathena will track it at the full household level automatically. And you don't have to do the manual reconciliation anymore. And setting up households is very easy. You can just come to accounts, set up your household. And because we're getting the data from the custodian, you're able to plug up whatever account you want to that household. Maybe you have a household with several accounts. And so that's a good way of just kind of organizing your book of business even before you get into some of the day-to-day trading activity.
Awesome. Very cool.
Yeah. And so I am going to get into kind of replacements next, right? So I can do this for a long only portfolio as well. This is just S&P 100, it looks like, smaller account, but you'll see just the long only losses here. I don't know how the tax loss harvesting metrics differ, but you're only going to have one-sided losses. Right, so it's been a rough couple weeks now, I suppose. So you're seeing quite a few recognizable names in here that have losses and a substantial amount of tax impact. I want to get into replacements next, Johnny. This is kind of what advisors are frequently asking about, like how do we replace the losses without deviating our portfolio too much, and what's the risk there? And I think all of those questions come with reasonable concern. You have a loss, you swap it into something similar, but that similar security can't drift the portfolio from your model, right? You want to keep it in line with your model, whatever strategies are associated with your accounts. You're okay generating the tax savings for the client, but you don't want the portfolio to deviate too much. And if you're not careful, 6 or 8 of these swaps, into the year, and the portfolio might not look how it once did. You've captured tax value, but you've changed what the client actually owns. And so every time Alphathena proposes a replacement, what we're doing is we're checking it against a couple things. We have two modes of tax loss harvesting replacements. But overall, we're checking it against the target model, factor exposure, sector weights, tracking error, basically the whole picture. And if a swap would push deviation outside of the tolerance you've set for your client, we want to show you that trade-off before it actually happens, and it'll kind of give you some transparency there. And so the two tax loss harvesting replacement methods, right, we're selling off all of these right here: Tesla, Boston Scientific, Oracle, Accenture, the list goes on and on. What are we replacing those securities with? The first mode is going to be what we call security level replacements, where the system is generating some replacement securities that are correlated with the loss that you're selling off, and tied to it by market cap and sector, right? So Tesla, you're going to see some of the automotive companies. Ford, GM, looks like an ETF there. Oracle, you've got your software companies. Salesforce, same thing. And you can effectively change these. You can put a custom ticker in if you wanted to. What we're doing here is we're selling off these and buying these to replace them. This is typically used if you're kind of actively managing a basket of securities, or you have a model of single stocks that you want to kind of maintain. Otherwise, we would suggest using what we call account level replacements or optimized replacements. And that works a little bit different. So instead of in-kind replacements, right, trying to replace Tesla with another automotive company, trying to replace Nike with a shoe or retail company, this is trying to get you a reduced tracking error. So it's trying to get you closer to your target model. And if I hit optimized replacements, what it's going to do is our optimizer is going to look through the target and the existing portfolio and say, hey, what do we need to add? What stocks and how many units of each do we need to add to this portfolio to reduce the tracking error? So you'll see pre and post optimization tracking error here. What this is saying is before we went out and bought these securities, the tracking error was 301 basis points, 3%. When we went out and sold off all of these at a loss and replaced them with these, right, NVIDIA, Intel, Broadcom, we reduced the tracking error by 23 basis points. And that's good because you're kind of rebalancing while you tax loss harvest. So you're killing 2 birds with 1 stone here, and getting closer to your target. So that's effectively the replacement part of this, right? I can either do security level replacements and do these, or the account level replacements. Ultimately, when I'm done, I can preview the orders, see the buys and sells, and submit them. They'll go directly to my custodian, unless you've instructed us, to set up the trading process, the trading structure differently for you, or you just prefer to do a manual trade file download. But effectively, once you've done that, you're done with this account. And I'm going to hop back to the multi-account view now that I've shown you kind of how it operates under the hood. Multi-account, multi-strategy, you're able to rebalance or tax loss harvest multiple accounts simultaneously. So this is going to look through, it's going to use the account level replacement or the optimization replacement strategy. And it's basically just tax loss harvesting across multiple accounts at once. So you don't necessarily have the control that you do with one account, but you do have the efficiency. So it's kind of a trade-off there. But I can flip this to tax loss harvesting mode. It's going to find the tax savings for me. If I'm ready to go, I can select all three of these accounts at once, preview the orders, see you've got 3 accounts here, buys and sells, and I can just place the orders and they'll go directly back to the custodian. So that's kind of the workflow for tax loss harvesting, and I'll pause there. I don't know if you have any feedback or comments, Johnny.
Really cool, man. No, I mean, I think you've taken us from start to finish, all the way through those just pass-through trade orders that go straight to the custodian, which I feel like, we should be used to by now, but we're not. It's still a very important part of the process to have that close custodial integration, just finishing things off for you. One question for you. Is there anywhere yet that Athena AI is kind of accessible throughout this process, or is that something that we're looking forward to coming soon? Because we've talked about Athena a handful of times in these recent webinars. We've looked at how it's kind of baked into the trade order management, the transition portfolios process, obviously. Anywhere here where either we want to look at it or talk about how that's going to be a part of this in the future?
Yes, we do have Athena AI in tax loss harvesting. I'm glad you asked. You can ask Athena any questions about what you're seeing, tell it to summarize the harvesting opportunities, answer why some positions are being excluded. I mean, these are just kind of boilerplate questions up here, but you can get very detailed and it'll give you a probabilistic answer. And so, I can say, do any positions have wash sales, or, whatever it is, what's the estimated tax benefit, and walk me through the equation or the formula on how you arrived at this number, and it'll tell you. So I'm glad you asked. Another feature while we're talking about AI, Johnny, is this AI summary here. So at any time, and I guess I'll back up a little bit, kind of a short story. I used to be a client service associate for about $1.5 billion AUM RIA here in the Chicagoland area. And I was supporting 2 teams of financial advisors, and every day was different, but you would have clients. I was the point person on behalf of my financial advisors, and the clients would call me and I would answer the phones, and they would say, hey, the markets are doing exactly what they're doing this week. What's happening in my portfolio? Am I okay? Are you guys doing any tax loss harvesting? I would get those questions live on the phone. And so this AI summary feature that we have is a really good way to just kind of update your clients on the fly. Maybe you need to jot some notes down for a review meeting. It's just going to give you a synopsis, an AI generated synopsis of the portfolio. No client sensitive data is going through the LLMs. We don't train any of our models on client data. It's really just looking through the portfolio metrics here. So it's going to tell you things like notable gains, notable losses, recent tax loss harvesting activities. And you can also just, ask, put in some custom instructions as well. So got lots of AI, a lot of AI answers, AI generated answers to very unique questions in ways that you can get those questions answered on the platform.
Yeah. I mean, the 2 pieces of that to me are very important. You said already, hey, this data is locked inside the Alphathena ecosystem, not being trained anywhere, not being farmed out to any other servers, right? This is a very secure approach to having AI within the system. And then the other piece, which you touched on, is, it's not just pre-selected questions, like we've had back in the day. It is full plain English, natural language inputs. Ask it anything about the account, and it's going to give it to you, which I think is just a game changer for how you can interact with your software, right? Like, it's not a point and click adventure anymore. The UI and the way you interact with it itself is fundamentally changing through this.
It is. Absolutely.
All right, so we're almost at time. Let's run into Q&A. And reminder, everybody, if you're watching on LinkedIn, hit those comments. If you're watching through the webinar platform, you can go ahead and either use chat or the Q&A functionality. Drop any questions you have. We'll give you a minute here to do that before we wrap up. But you also obviously can reach out directly after the fact to get your questions answered. Real quick, Josh, so you showed us, I think I've got one question for us, and you showed us how the system is doing that continuous monitoring, surfacing the opportunities, showing advisors, hey, here's what you can harvest. Here's how we can, accomplish this very time efficient way. Does an advisor have the control to go in and manually do that, or do they have control over which positions really get harvested, or is it all through this automated process? Like, if somebody wanted to take that next step and just dive in there, can they do that?
Yeah, absolutely. It's fully flexible in what losses you realize and how many you take. Ultimately, what we're doing is just what Alphathena is doing is doing the analysis on the background to try and make you to try and make it easier for you. So it's providing you with those cues, if you will, and it's up to the advisor to realize whatever losses they want, replace them what they want. We just want to give them the toolkit to say, hey, here's what I've got in front of me. Yeah. So it's not an all or nothing thing.
Gotcha. Awesome.
Whenever and kick it off that way.
Yeah. And I think you hit the nail on the head. Like, the entire thesis of the Alphathena platform is keep the advisor in control. So give them the information they need, make it fast and easy for them to make decisions, but the advisor's that person, finger on the button, making things happen.
Right. Yep. Efficiency without sacrificing control.
Absolutely. All right, man. Well, I think that puts us right about at our time here. So I'm going to kind of start to wrap us up. If you're watching, thank you for joining. Appreciate you being here. And again, if you want to see how this kind of tax loss harvesting on demand could work in your specific workflows with what your firm is doing, go ahead and reach out to Josh direct. Josh, you're on LinkedIn all the time. People can get at you there. What's another way to reach you that's good?
LinkedIn's great. You can reach the team through the website, alphathena.com. Request a demo there. Just say hi to us. Check out our new website, which is coming here in the next few weeks. We're really excited about. Or my email is just josh.harris@alphathena.com. So.
All right. Awesome, man. Okay. Before we end, mark your calendars for August 26th. That's going to be next month's event. We're going to bring on a special guest to talk to us about how they are scaling personalized investing in their RIA by working with the Alphathena team. So invite for that is coming soon. Hope you'll be back.
Be there.
Take care, everybody.
Thanks, guys. Have a great day.